Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 66, where we've got a bit of a follow-on weekly wisdom from last week's article this week. It's not, I don't think they're deliberately linked, but I think there is a link in what we're talking about here today. So before I dive in, if you're watching on YouTube, make sure you hit the subscribe button and the little bell to get notified when these videos come out. Help us grow the channel. And if you're watching on Facebook or LinkedIn, down there you'll find the like, the comment, and the share buttons, and feel free to smash them. Leave us a comment, let us know what you thought, and let's get more of these videos seen by people who are following us, so that we can help people with their financial literacy and understanding of what's going on in the news and how that relates to them managing and growing their money, when you growing your wealth as well. So today I'm looking at this one: Aussie crisis drives job loss fears. And when we come across to the actual article, it says two business surveys index, that's not probably correct English, but anyway, shows a dip in confidence for business and consumers. So what's this all about? So we go into the article and we can see that they're looking at consumer sentiment and what people feel about the future, the job market, the economy, and just generally how they're coping from a day-to-day living perspective. And I'm not necessarily going to get overly bogged down in the detail in this article, because a lot of it's just, nice to know maybe, but in reality, it's not that important. But what they're basically saying is that people are feeling less confident about the economy, and they're having a more negative view on the future in the next 12 months than they had previously about the economy. And why did I say that I think this story is linked to last week's Weekly Wisdom video? Well, last week, you might recall, we were talking about interest rates again, and why there was some good news, bad news in relation to interest rates. And I think this article links with that one from the perspective that the Reserve Bank now has a real challenge, because one of the reasons that they had to get interest rates rising so rapidly, obviously, was because of inflation. And they were fearful that if inflation got out of control, it would lead to people, employees, asking for wage rises to cope with the cost of living crisis. And so if people are now feeling even less confident about the economy, and interest rates are still high, and inflation is being stubborn, the Reserve Bank has a real difficult challenge ahead of them to manage what we call a soft landing in economics world with relation to the economy itself, and that dreaded R word, the recession word, that everybody wants to avoid. Now, I'm not saying we're heading to a recession, but if people are feeling fearful about the economy, that tends to mean they keep their hands out of their wallets, or they stop swiping in the modern economy. And if they stop swiping and the economy doesn't grow, because again, remember last week we looked at the growth of GDP. Well, if the economy stops growing, then technically we ended up in a recession, and we ended up, once again, we end up in this circular argument of one thing leading to the other thing, which leads to the third thing, which leads to the fourth thing. And in this case, we're talking about if people stop spending, the economy stops growing, which leads to a recession, which then means they're going to have to rapidly drop interest rates, almost as rapidly as they increase them, to get us spending again. And so to avoid all of that and all the harm that comes with that is the need for the Reserve Bank to manage interest rates in a way that won't result in the economy going into a recession, and giving some confidence to the market and to the population that rates and the economy and wage growth and job security are all going to be there. And so this article is very much saying that people are fearful about job security, and that the economy is not growing that rapidly, and therefore businesses are going to be tightening their belts, and there's this GDP, and it's going to lead to potential job losses. And again, that's not the type of thing that the Reserve Bank wants in a high interest rate environment. And so it's a very, very difficult and fine line that the Reserve Bank has to pull off when it comes to interest rates. And whilst I've pulled this article out here, and it does even mention that the Reserve Bank meets on the 23rd, 24th of September, but they're not expecting to decrease rates, because we've got the Reserve Bank governor out there talking about, well, it's just not going to happen at this side of the Christmas period. Then we're in a very difficult phase for the households who are struggling under the high interest rates, the rising prices of everything, and there's not a lot of relief in sight. And so people are looking to interest rates for that relief, but the Reserve Bank is being rather stubborn about it. And so that is now playing out in these surveys about people's opinion and feelings about what's the economy doing. And with more fear of loss of jobs and rising cost of living, people will just stop spending. And again, I looked at another article that I was going to do on today, but this one, I guess, won the day. But there was another one in there about how there had been a bit of a surge in spending at the start of September, or end of August, start of September. But that just turns out because of the timing of Father's Day. And it doesn't necessarily result, or hasn't necessarily fueled many people into thinking that there is a spending boom coming back. So all of these factors, they are counterintuitive to an extent, in that one leads you down one path, the other leads you down the opposite path, and you're left confused as to what to listen to. But I think the message that I really wanted to get out of this article today is that there are, a whole range of factors that are not necessarily meeting in the middle. And as a result, the next move by the Reserve Bank is going to be very closely watched, because the last thing they want is for that fear to flood the market, lead to business owners to stop employing, to the economy stalling because people are fearful they might lose their job, and so they're going to keep as much cash as they possibly can. And that then ultimately leads to a recession, and with interest rates so high, that would be almost criminal for the Reserve Bank to lift interest rates so high, and then forcing us into a recession as a result. So very interesting times, and very delicate times to see how that we're going to manage our way out of this scenario. And I honestly think with the US very much indicating that the next move on interest rates, and soon, is down, that the Australian economy is going to need a similar impetus to just give us back some confidence, and give us back that confidence to spend so we can grow the economy, and see how we go on the other side of Christmas this year. So when it comes to what should you do, as per normal, we just continue on our merry way in terms of our investing plans. Now, if that means at slightly lower rate than previously, so if your surplus is under pressure because of the rising cost of living, then I get that. Make the adjustments, but whatever you do, keep chipping away at investing each month, so that in time you will have accumulated great assets and wealth over the time of your investment journey. So that is Woody's Weekly Wisdom, episode number 66. It's a little bit of a contrarian type weekly wisdom this week, where we've got lots of opposing pieces of data filling our news feeds and not really knowing which way is next or which way is up when it comes to the data. But ultimately, I think we're seeing the Australian economy is slowing. We're hearing that overseas economies are slowing as well. And so, growth in the economy and growth in wages and growth in profits and stock markets is probably going to be a little bit slower over the next few months whilst we work out where the next move is. But stay tuned, because we'll keep you abreast of what's going on with the data. But ultimately, like I said, stay the journey when it comes to your investing path, even if it means slightly less than normal because you're dealing with these cost pressures. But just keep chipping away, and ultimately you'll get to where you want to be. So join me again next week for another Woody's Weekly Wisdom. And like I said at the start, if you're watching on YouTube, hit the subscribe button and the little bell to get notified when these videos come out, and help us grow the channel so more and more people can tune in and get these videos. And if you're watching on Facebook and LinkedIn, hit the like and the share and the comment button. Let us know if there's some things that you want us to cover, and we'll do our best to cover them for you. Have a great week. I'll see you again next week. Cheers.